If you're a Canadian that's looking to begin your investing journey in 2024, look no further because today I'm going to help give you the confidence and fundamentals it takes to get your foot in the door of investing and hopefully set you on a lifelong journey of building wealth. If this is your first time to my channel, my name is Kevin at FinTrack Freedom. I'm a 25-year-old long-term investor, and this is my Canadian personal finance channel where my ultimate goal is to one day retire early off of my investments. I started my investing journey almost 4 years ago with zero knowledge, no help, and in that time I've been able to learn on my own and build my net worth north of $100,000 at the time of making this video. I would like to take this time to mention I am not a financial advisor, and my goal is to simply set you on the right path by giving you some knowledge I wish I knew to get me started. So on that note, let's begin. Step 1. Selecting a trading platform. If you haven't already found a trading platform, this can be quite intimidating, so it's important to do your own research to determine which one is best for you. Some of the most popular platforms include QuestTrade, BMO InvestorLine, RBC Direct Investing, TD Direct Investing, and my platform of choice, WealthSimple. I am not endorsed by WealthSimple, but in my opinion, it is by far the most beginner-friendly platform, and it has $0 trading fees, meaning you can trade as little or as much as you like without having to worry about a $5 to $10 trading fee each time you buy and sell, like some of the platforms do charge. Take your time upon deciding which platform you'd like to use, and if you're interested in using WealthSimple, you can sign up using my link in the description to receive a free $25 when you open and fund your account with any amount. Again, this is no pressure, this is just my platform of choice and what I think is the easiest to use as a beginner. Step 2. Selecting an account type. Upon creating your account on your trading platform, you will likely be prompted to select an account type to open. This can be scary if you're brand new because a lot of them are abbreviations that many don't understand. The most common account types and account types we'll cover today are the TFSA, which is a tax-free savings account, the RRSP, which is a retirement savings plan, the FHSA, which is a first home savings account, and a personal/non-registered account. To compare all the different account types, I'm going to be using a web page here on RBC, and I will leave a link in the description to this website if you want to go through and read any of this yourself. To start out, the TFSA is a tax-free savings account, as I had already mentioned, and it's a registered plan where your investment earnings and withdrawals are completely tax-free. The best thing to use a TFSA for is shorter-term goals, or even longer term like retirement. As long as you are a Canadian resident with a social insurance number and you are at least 18 or 19, or the age of majority in your province, you can open a TFSA. A lot of people might hear tax-free savings account and assume that it can only be used as a traditional savings account for interest, but that is completely false. You can buy a whole lot of things in here, such as stocks, options, bonds, GICs, a lot of stuff that if you're a new investor, you may not know, but the key thing to take away here is that you can invest in stocks within your TFSA. So TFSA contributions are not tax deductible, but on the other hand, any growth that you do get in your TFSA, you don't have to pay any tax on. So if you deposited, say, $10,000 and that grew to $100,000 over the course of your lifetime, and you withdraw it, you sell your stocks, you want to take your money out, you don't have to pay a single cent in tax. At the time of recording this video, it is still 2023, and in 2023, the most you could contribute for the year, if you had already maxed your contribution amount, was $6,500. But I'm going to go over to another website here that will calculate how much allocation room you are allowed to deposit in your TFSA. All right, so I'm over here on a TFSA contribution room calculator. You can go ahead and find this in the description as well. You'll just simply come in here and enter your information. So in this case, I'm going to just assume that we're a Canadian resident before 2010, and I'm just going to put a random year for the birthday. Let's put 1995, and let's say we have deposited $0 into our TFSA over our lifetime, and we have not made any withdrawals either. So our maximum contribution limit for deposits in the TFSA would be $68,000 in this case. I really recommend you go to this website and fill this out for yourself. A couple things to note here, starting in 2024, the contribution room is getting increased by $7,000. So in this scenario here, this made up scenario, it would not be $68,000 in 2024. This would be bumped up to $75,000 because we're adding $7,000 more. And another reason why that calculator is very important is because there is a overcontribution penalty tax. So you will get charged 1% per month on excess contributions if you overcontribute to your TFSA. So again, it's very important that you find out what your contribution limit is. All right, so now what about an RRSP? Well, this is a registered retirement savings plan, and if you couldn't tell by the name, this is meant to be saved as money for your retirement. As you can see here, a registered plan where your contributions are tax deductible up to your personal deduction limit. We'll get into that later. And investment earnings are tax deferred. Again, I will cover that very shortly. So as mentioned, this account type is typically saved for retirement. And who can open one? Canadian residents with a social insurance number who are under the age of 71 and have earned income and filed a tax return in Canada. That's very important. Are contributions tax deductible? Yes, they are. If you don't know what that means, it means you can deduct them off of your taxes for the year. So for example, let's say in 2023 here, I have deposited $5,000 into my RRSP. I would then be able to file $5,000 off of my taxes and potentially save myself from owing more taxes, or in some cases, you will actually get money back on your taxes depending on how much money you made and how much money you have deposited in your RRSP. So unlike the TFSA, any growth is tax deferred. And basically what this means is if I buy a stock and it doubled in price, I'm allowed to sell it and get double my money back as long as I don't withdraw the money out of the RRSP. So essentially, I could buy a stock and say it does really well. I could sell it and then I could rebuy another stock with extra money that I had from the gains of the previous stock, if that makes sense. The key takeaway here is that you do not have to pay taxes unless you withdraw this money into your bank account. It would then be treated like income and it would have to be reported on your taxes. How much can you contribute each year into your RRSP? It's 18% of previous year's earned income, less any pension adjustments, up to a maximum limit of $30,780 for 2023. This amount changes every single year. It typically goes up a little bit every year. But if you would like to find out your lifetime RRSP allocation, you can log into your CRA account, and on your main dashboard, if you scroll all the way down to the bottom, you should see something down there that says RRSP contribution limit. So what about an FHSA and or tax-free first home savings account? This one is pretty straightforward. This one is used to save for your first home, but there are a couple key takeaways here. This account takes some of the positives from the TFSA and the RRSP and combines them into this account, the FHSA. And essentially, any gains in the FHSA are completely tax-free, just like the TFSA is. And just like how the RRSP is with tax deductions, you can, like mentioned, deduct from your taxes when you make allocations into your FHSA. How much can you contribute into your FHSA? Well, it's $8,000 annually, plus up to $8,000 of any unused contribution room, up to a maximum lifetime of $40,000. What this means is if you first opened your FHSA in 2024, you would, in that year, be able to allocate $8,000 into the account, and then you would have to wait till next year to do another $8,000, and then the next year to do another $8,000 until you hit a max of $40,000. But don't worry, if you don't do the full $8,000 in that year, as long as you've opened the account can stay open for 15 years, assuming you don't buy a house in that time, and you can carry forward any contribution room once the account is open. Another few key things to mention here: you cannot open a FHSA if you have had a home where you've lived in the current calendar year or at any time in the preceding 4 calendar years. And of course, if you already own a home, you cannot open a FHSA. So can you take your money out of an FHSA for any reason? Yes, although timing depends on what investment you hold in your FHSA. If you use the funds for anything other than a qualifying first home, your withdrawal will be taxable. So you only get the benefits of the TFSA if you're using this account to buy your home. So say I'm buying a home next year and I know I need to withdraw for some money for the down payment. I will not be charged any tax upon withdrawal. But say I need the money and I'm not buying a house, Just like the RRSP, if you withdraw into your bank account, you will be hit with basically the equivalent of income tax on that money. Now, what about a non-registered or personal account? This one is very, very straightforward. Basically, there is no limit to how much money you can have in them, but anything you sell for profit, you will be taxed on. So it is not a tax-sheltered account. You do not get tax deductions for it. So it is very important that you utilize the TFSA, RRSP, and FHSA before you dip your toes into a non-registered account. Overall, for any new investors, the most popular account type will be the TFSA until this is maxed, and then you can weigh your options whether you are saving for a first home, so then you can open a FHSA, and then if, say, you have a maxed FHSA and TFSA at that point, you can then start dipping into the RRSP, and if that account is also maxed, you can then go into a non-registered account. Step 3, buying your first stock. With your first account type selected and opened, so for most of you this is probably going to be your TFSA, it's time to buy your first stock or ETF. Using your platform of choice, you will be able to search for specific companies or ticker symbols you may be interested in. I can't tell you exactly what to buy, however, I will suggest buying ETFs instead of individual stocks if you are a beginner. ETFs have a great proven track record and take away a lot of the stress of worrying about specific companies, but you might be asking, what is an ETF? An ETF is an exchange-traded fund, and it's essentially a vast basket of sometimes dozens to thousands of different stocks within one stock. Some of my favorite and most popular ETFs include the following ticker symbols: VFV, HXQ, VDY, XEQT, and XBOW. Figuring out what stocks are within an ETF can be a little confusing at first, so I'm going to show everyone here how you can look up the individual stocks that lie within an ETF. All right, so for example's sake, let's say I want to figure out what stocks are within the ETF VFV, which is an S&P 500 tracked ETF. So I'm going to go ahead and search here VFV, and you can put stock, and then I like to just put holdings. So for this example, VFV stock holdings, we'll search it up here, and typically it's one of the very first results that you'll get. As you can see here, holding details. Let's go ahead and click this here for VFV. This will change depending on who owns the ETF. Let's just agree to all this. And once we're here, this is probably very, very confusing if this is your first time visiting one of these websites. But essentially, you're going to want to just scroll down, scroll down, scroll down. Usually it's a little bit further down on the page here until we get to a little bit further. There we go. Holding details. Now, this is a table here that shows you all of the top holdings that are within this ETF. So we can see here that Microsoft makes up 7.3% of this total ETF. Apple is 7.24%. Amazon is 3.44%. Nvidia is 3%, and so on. So a lot of big tech companies within this one. This is the S&P 500. But as you can see here, we can export all 500 holdings. This means there are 512 different companies within this one ETF, and you can go ahead and download this. If you really want to see every individual company within an ETF, you can view that. But this is a great way to figure out what exactly is going to be in the ETF you're looking for. Once you've decided on a stock or ETF, simply go ahead and place an order. Congratulations, you're officially an investor. With all that being said, I would like to share some key things to remember about investing. First off, be patient. Time in the market beats timing the market. The longer you invest, the more likely you are to build wealth. Second, keep it simple. Most people can't pick individual stocks and outperform the S&P 500, so sticking to simple ETFs in most cases is the smartest move. Third, think long term. Don't get discouraged if your stocks fall in price. Take the opportunity to buy more at a lower cost and keep thinking ahead to the future. And lastly, do what works best for you. You'll often find people online telling you what's best, how much to invest, where to invest. At the end of the day, it's your investing journey, so take it at your own pace and do what you understand most. Alright everyone, that's going to do it for this video. Be sure to leave a like if you have made it this far to help with that YouTube algorithm. Let's aim for 50 likes on this one. And also be sure to subscribe and hit that bell icon to never miss a video like this in the future. And yeah, other than that, thank you all very much for watching, and I'll see you next time.